Good morning, everyone. Welcome to the COVID-19 support update. I hope everyone's doing well this morning, and I thank you for joining us. We are going to cover quite a broad range of support programs today. The plan is to cover more of an update and not really going through the original programs, as by now most people are familiar with the basic structure of the programs. But with the flurry of updates that have been coming our way over the past months, we thought it would be a good idea to focus on the updates and try to get some clarity in all of this confusion. So my name is Angeli Delari. I'm a partner at Logan Katz, Chartered Professional Accountants, and we're pleased to be providing this information to you. And we've been doing this since the beginning of the pandemic, along 8 months ago, and we'll continue to do so, just in an effort to keep everyone informed on what the programs are and what assistance there is available during these very, very challenging times. So without further ado, let's get started. So just as a general disclaimer, keep in mind that this is informational and not to be used as professional advice, any of the contents here. You are always advised to talk to your accountant if you need to access these programs or need more information, and particularly information as to how these programs apply to your particular fact circumstances. The structure of the webinar will be a brief overview, and then we'll jump into support programs for businesses, as well as followed by support programs for individuals. And we'll end with some additional considerations that we wanted to bring to your attention. So to begin, in terms of the support measures, the purpose of this slide is essentially to tell you that there are a number of support measures out there. We're not going to try in any way, nor could a webinar try to cover all of them. So really the point is there are a number of measures out there, and some are specific for certain sectors. There are also provincial programs. We're going to cover some of the bigger programs out there and focusing on the updates, as I said, in the areas that are highlighted, in the areas of hiring employees, access to credit, support for self-employed, and support for individuals and families and those facing income loss. Again, there are other programs. The Government of Canada website is the best place to go, as well as provincial websites, to find out about them. Now, before I jump into the programs we'll cover, one of the other programs I just want to touch on is the Canada United Small Business Relief Fund. This just came out last week. Please look it up if this could apply to you. These are grants of up to $5,000 as reimbursement of expenses for expenses incurred in terms of to have a safe reopening. So PPE, renovation of space, adoption of digital technologies, website, and so forth. This is available as of this week for any corporation or sole proprietor that has less than 75 employees and sales between 150 and 3 million. Again, more details on this can be found by just a simple Google search on the Canada United Small Business Relief Fund, or checking out our website, the COVID section. There's a support report, which will give you some additional information as well as links. So just wanted to bring that up because that's not a program we cover, but it just came out and it may be of use to some of the listeners. So jumping into the programs we will cover today, we will cover a number of programs to begin with for support for businesses. The 7 programs listed here, first 3 are related to hiring of employees, and the next 4 are access to credit, followed by the support for individuals, the major program, the Canada Emergency Response Benefit, which has just ended, and then what has replaced it, 3 new programs, as well as an enhanced DEI. We'll cover some of the changes there as well. So we'll get started with the first program I wanted to touch on, which is a temporary wage subsidy. This is a program for businesses related to hiring of employees. It was the first program put out, a small program which allows you to receive 10% of your employee's remuneration that was paid between the 3 months between March 18th and June 19th. So the main thing about this program was there was no revenue test. There was no revenue threshold, which allowed access to a broad range of businesses or employers. And it was received through reduced payroll remittances. So what I want to bring to your attention with respect to this program, because it is now for a past period, is that you can still apply for it. The temporary wage subsidy, whether you have applied for it or you intend to apply for it, you would have to report this through a self-identification form. It's called a PD-27. There's no stated deadline for this reporting, but we recommend you do this by the end of the year. So there are 3 buckets. There are those that access the TWS. You will have to report on a self-identification form. There are those that may not have accessed it, may have thought they don't qualify. The message is you can still access it if you qualify. It's not too late. Report on a PD-27 form, and you can still obtain access to this, what I call sort of low-hanging fruit. And the third group is those who have applied for the Canada Emergency Wage Subsidy. That's the CEWS program. You as well have to report on a self-identification form, regardless of whether you actually access the TWS. So if you fall in any of those 3 buckets, please remember that you have to report on this PD-27 form. It's a self-identification form. You can scan it and send it in through My Business account, or mail or fax it in as well. And that's pretty much all I want to cover on the TWS. You'll notice on my slides at the bottom, the box in red are the updates that I want to focus on this webinar, just to highlight them a little further. So the next program I'd like to cover is the Canada Emergency Wage Subsidy. So you will recall this is a subsidy that provides 75% of an employee's weekly remuneration. The CEWS, I'll call it CEWS for short, that program did not have, unlike the TWS, the CEWS program did have a revenue reduction test. So you were required to meet a revenue reduction threshold in order to access the CEWS. As with all programs, it's taxable and it must be included in computing income. The original CEWS program was rolled out for a period of 12 weeks from March 15th to June 6th. These were known as periods 1 to 3. Then the government introduced what I call CEWS 2.0. They significantly changed the program, and that was for the remaining periods up until the end of the year, from June 7th to December 19th, otherwise known as periods 4 to 10. So this was an additional 24 weeks. And most recently, the government announced that they will be extending the CEWS program into 2021 to June 2021. Now, the details on what this extended program will look like have not been released. It is quite conceivable that, and likely that, it will change from what CEWS 2.0 looks like, and likely will change in accordance with the needs that are determined going into 2021, i.e. where are we with respect to the pandemic, how are businesses doing, how is recovery going. So again, not a lot of details, but it will be extended into June 2021. So with respect to the original CEWS program, I think there was a good understanding by most employers and businesses on what that program entailed. Where I think we lost a lot of understanding is the changes in CEWS 2.0. The changes were complicated, and I think we may have lost a lot of uptake because of the complications. So what I'd like to do here is I'd like to go over some of the changes that CEWS 2.0 brought about, with a view to encouraging you to relook at the CEWS program if at some point early on you determined that you were not eligible based on the original CEWS rules. You were encouraged to relook at the program because it changed so significantly, and you may indeed be eligible now. So I'll go over some of those changes. As well, there were some recent period 8 changes made to the CEWS program. Just as a point of reference, we are currently in period 9. Period 8 was just finished as of last week. And as well, there were recent changes made to the furloughed employees and how they are treated. And that will be effective period 9 forward. I'll go through those as well in a few minutes. The last thing I wanted to just point out is the access to the CEWS program. It is still available retroactively. You can apply until February 2021. So again, encouraged to take a look at it. If you have a misconception that the periods are over and you can't apply, that's not the case. You can apply up until February 2021. So a couple of things I want to point out about CEWS 2.0. The revenue reduction test. So you will recall the original CEWS program had a threshold test. Essentially, if you met the revenue reduction threshold, you had access to the program, assuming you met the other criteria. And if you didn't, you didn't. So it was a threshold test. The revenue threshold was 15% in March, revenue reduction of 30% in April, 30% in May, and then later added 30% in June. CEWS 2.0 differs significantly in that there is no threshold test. Essentially, your subsidy amount varies with your revenue reduction percentage. So essentially, you could have a revenue reduction percentage of anything greater than 0, 1%, and you have access to the subsidy. So again, a big change from the original CEWS, which had a fixed threshold test, which allowed you in or out, or kept you out. The second change is that the subsidy became a two-part subsidy. There was a base subsidy amount, and this base is available to, like I said, to anyone with a revenue decline, any revenue decline. So you would determine your monthly revenue decline. You would multiply that by a factor. This factor declines over time. So in periods 5 and 6, this factor was 1.2. Then it declines going into period 7 to 1.0, into period 8 to 0.8, and so forth. The base revenue reduction would be your calculated revenue reduction multiplied by a factor. Let's use 1.2 for period 5 right now, and that would be your revenue reduction percentage for base. Now, you are subject to a maximum though, and that is 60%. And that declines as well as the periods go on. So period 5 and 6, that maximum was 60%. That reduced to 50% for period 7, and then 40% for period 8, and so forth for period 9 and 10. So it was a declining scale. That's what they referred to as a declining scale. So that was the base, again, available to all, based on your actual revenue reduction. There was then also a top-up percentage. This top-up is available to those that were most adversely affected, and that was defined as those with a revenue reduction percentage greater than 50%. The calculation of the top-up, though, is different than the calculation of the base. Instead of the monthly revenue decline, you would look at the average preceding 3 months revenue decline. You would take the amount of that decline that's above 50%, and you would multiply that by a fixed factor of 1.25. So if we are in October, for example, you would take the revenue decline for the preceding 3 months, July, August, September, and if that revenue decline was over 50%, so let's say it was 70%, the amount over 50 is 20%. You would multiply that by the factor of 1.25, and that would be your top-up percentage. However, the top-up percentage is subject to a maximum of 25%. So you can see that, for example, in period 5 and 6, the maximum SUS 2.0 percentage would be 60% for a base plus 25% for a top-up, which would be 85%. Again, that is higher than your original SUS percentage, which was, if you recall, it was 75%. So a more generous SUS for those that are most adversely affected. SUS 2.0, because of the timing of when it came out, they decided that for period 4, you would use the original SUS calculations, but for periods 5 forward, you would use the new SUS 2.0 calculations. They also provided transitional rules for period 5 and 6 because SUS 2.0 rules came out so late, and businesses may have relied on a calculation based on the original SUS calculator. They allowed transitional rules as well. They had some new period 8 changes as well, and I'll go through those in a few minutes. So with respect to the subsidy amount, original SUS, you'll recall, was 75% of eligible remuneration, subject to some limits. I've listed them here. Lesser of eligible remuneration and 75% of baseline. SUS 2.0 is no longer a 75% fixed number. It is the base percentage I just talked about plus the top-up percentage I just talked about, multiplied by the least of the remuneration paid, or 11.25. So you can see that for arm's length employees, that baseline reference has been removed. Essentially, you're just looking at your base and top-up percentage multiplied by what you actually paid, or 11.29, whatever is less. No reference to baseline anymore. This is in contrast to non-arm's length employees, which still have a baseline limitation. So you can see in the old original SUS, non-arm's length employees had a baseline of, had a limit of 75% of their baseline, and they continue to have a limit of baseline. One thing I just want to point out here is that somewhere between the original SUS and SUS 2.0, there was another change made, which was the allowing of different baseline periods. This would be done through an election. So you'll recall originally when SUS was rolled out, the baseline period was January 1st to March 15th, 2020. Later baseline periods were opened up. These were elections that could be made, and there were a number of baseline periods depending on the claim period. For example, for claim period 5 to 9, you could elect to use a different baseline, which could be the period July 1st, 2019 to December 31st, 2019. So just wanted to bring that up, that there was an opening up of baseline periods, and that could affect positively some non-arm's length employees. And what originally you may have determined that a non-arm's length employee or a seasonal employee would not have been eligible for SUBS, with the opening up of baseline, they may in fact be eligible. So again, encouraged to relook at the rules to see if you may have been eligible. With respect to other changes that SUBS 2.0 brought about, wanted to highlight a few of them here. Employees who were unpaid for 14 or more days can now be included in the calculation of SUBS. This is a change to what the original SUBS had, which they had to be specifically excluded. As well, the deeming rule, you'll recall in the original SUBS, there was a deeming rule that said if you qualified, if you met the revenue reduction for one period, you automatically met the revenue reduction for the immediately following period. The equivalent of that rule, which was called the deeming rule, for SUBS 2.0 is, if your revenue reduction percentage for your previous period is greater than your revenue reduction percentage for your current period, you could deem the previous period revenue reduction to be your current period revenue reduction. So essentially you can take whatever is better for you, the previous period or the current period, in order to calculate your SUBS claim for the current period. As well, I talked about transitional rules. These are called safe harbor rules for period 5 and 6. And essentially what this did is it guaranteed a 75% the original SUBS rate for period 5 and 6, as long as you qualified. So for non-furloughed employees, what that meant is if your revenue reduction in period 5 and 6 or 6 was at least 30%, which was the qualifying percentage in the original SUBS, then you could opt to use period 1 to 4, the original SUBS calculation, or you could use the new SUBS calculation. It was up to you, whatever worked better in your favor. For furloughed employees, so remember these are employees on leave with pay, this rule was you essentially just had to have a base or a top-up percentage, revenue reduction percentage greater than 0%, and then you too could opt to use the original SUBS calculation or the new SUBS calculation for periods 5 and 6. Another change that was introduced with SUBS 2.0, it was a one-time prospective election change. You will recall that for SUBS, you have an option of using the general or the alternative approach in calculating your revenue reduction. The general approach meant you're comparing your revenue reduction to the same month in the prior year. So for example, if you're looking at October 2020 revenue, you would compare it to October 2019 revenue. That was the general approach. The alternative approach was that you could compare, for example, October 2020 revenues to the average of January-February 2020 revenues. That was called the alternative approach. And you could, you had a choice of using the general or the alternative approach. SUBS 2.0 came along and you were allowed to make a change to this approach. But the change had to be prospective. So the change would be, if you had used one approach for periods 1 to 4, you could change it for periods 5 to 9 going forward. This would have to be an election. So again, worth looking at which approach serves you better. Now, knowing the new SUBS rules and some of the changes that have been put in place, it's worth taking sort of a relook at this and seeing which approach, the general or the alternative, would serve you better. As well, there was a retroactive option with respect to the cash or accrual method. So the retroactive option, election change, was, you'll recall that in order to calculate your revenue reduction, you could use either the cash or the accrual method. You would elect the method that was not your normal method. Now, this election change, if you did not elect, you could actually go back and change it. So if originally you were on the accrual method, you can go back if you found that, oh, it might be beneficial for you to use the cash method. You could retroactively change and elect to use the cash method. Again, if you've already filed claims for periods 1 to 4, you would have to go and refile, amend those claims and refile them. So it's a bit of an administrative hassle, but it could be worth your while depending on your numbers. So again, take a look at the cash versus accrual method to determine which one is now beneficial to you in hindsight, and consider an election that would have to be applied retroactively. So those were the major changes when SUSE 2.0 came out. There were subsequently, most recently in the last 2 weeks, additional changes made to SUSE 2.0. These changes would be effective for period 8 and forward. And these are, first of all, you recall a few slides ago, I talked about a base maximum that was to be applied for the base subsidy that declined over time. So it was going from 60 to 50 to 40 and eventually would go to 20. What they decided to do is to freeze that base maximum at 40%, presumably in light of the recovery efforts not going as well and being still in the very thick of a pandemic. They've decided to not go to a 20% max. So from period 8 forward until the end of the year to period 10, the base maximum will be frozen at 40%, which means combined with the top-up maximum of 25, your overall maximum will remain at 65% from period 8 up until the end of the year. So that was change 1. The second change was they decided to harmonize the calculation of the top-up. The top-up calculation, you will recall, was an average of the preceding 3 months. They've decided to harmonize that so that for the top-up calculation, you could also use the current month decline, the current month revenue reduction. So both top-up and base would use the monthly decline. They also decided to allow a safe harbor rule. Because this change was made so late in the game, they said you can opt to use either for your top-up. You can use the preceding 3-month average or your current month, whichever is more in your favor. So again, all to say, really worth looking at alternative scenarios to determine what works better for you, and you have the option of using either. The last change that was most recently announced in the last 2 weeks was the treatment of furloughed employees for periods 9 and 10. So you may recall that furloughed employees were sort of left in the open, and the government just kept extending the treatment of furloughed to say we'll keep using original SUSE and what we've provided in guidance for original SUSE. But finally, they've determined, okay, for period 9 and 10, that the treatment of furloughed employees, the subsidy amount will be the amount paid, or if it's greater than 500 a week, the greater of 500 and 55% of pre-crisis remuneration, up to a maximum of 573. So again, really harmonizing with the EI rules, which I'll talk about a little later. So those were the SUSE 2.0 changes. So again, if you were unfamiliar with SUSE 2.0, hopefully you understand a little bit more what these changes are, and you are really encouraged to take a look at, relook at SUSE to make sure that it, to determine whether it applies to you, but also to do some recalculations to determine whether you should be making some changes to perhaps even your original SUSE application, or at least considering those changes given the options that are have opened up with SUSE 2.0. The next two slides, nothing really new here, just sort of a summary of what the eligible employee looks like. In the interest of time, I won't spend too much time here, but really they're available for your reference. And the slide deck as a whole, we will make it available as well so that you can look back on the slide deck if you need to refer to any of these. The eligible employee and the eligible remuneration. Again, nothing really that I want to point out that's new. I did point out already that you cannot include for periods 1 to 4 employees that had remuneration for 14, did not have remuneration for 14 consecutive days in that period. That changed for periods 5 to 9. You can include them. Other than that, just general reminders. You can hire back and pay employees retroactively, look at each week in a claim period, and so forth. For eligible remuneration, a lot came out in terms of FAQs, frequently asked questions. So this slide really just serves as a summary of what you can include and cannot include in eligible remuneration. Essentially amounts paid to employees for salary, wages, other remuneration, certain taxable benefits, provided they're paid. General rule of thumb, if you'd otherwise be required to make payroll deductions, then it probably is eligible remuneration. Specific FAQs have addressed many specific items, such as tips, controlled and declared tips should be included. Sick, vacation, stat pay should be included in respect of the week in the claim period only, though. Not lump sums that are for previous periods. And then a number of items that should be excluded, such as retiring allowances, severances, stock option benefits, dividends, and so forth. With respect to, so that's all I wanted to cover on the SUSE program. Just want to touch on the Canada Work Sharing Program enhancement because there have really been no updates here. Just to let you know, this is still available as a program that could be considered. And essentially what this is a sharing of work between 2 or more employees at in your business, and an arrangement can be made where you can reduce the work and have employees share it and give them access to EI benefits. This would be, again, if this may apply to you, this is just a reminder to look into it as an option. Nothing new here. The program remains with as it was originally announced with its enhancements related to COVID. So that concludes the business programs that related to hiring of employees. I'll cover a couple of programs now that relate to access to credit. So one of the most widely accessed programs was the Canada Emergency Business Account. This is called in short the CEBA account. This was the, you'll recall, the government guaranteed interest-free loan of $40,000, 25% of which would be forgiven if it was repaid by December 31st, 2022. There were various criteria for access to this, originally rolled out with a payroll criteria, subsequently rolled out with an option for those that didn't meet the payroll criteria, and this was accessed through your financial institution. So what's new with CEBA? First of all, this application deadline has been extended to December 31st. So really important to note, if you haven't applied, you can still apply. You have until December 31st of this year. Most recently, a pretty exciting new change has been made. Originally, when CEBA was rolled out, one of the criteria was you had to have a business checking account. They've now made an option SIBA is available to businesses that had been operating out of a non-business checking account. However, you will have to obtain a business checking account before the end of the year, December 31st, in order to have access. So a window has been opened up to those who were not operating out of a business checking account earlier. You'd have to meet, obviously, the other criteria of SIBA. So if this applies to you, take a relook at SIBA. The third change I wanted to cover, and it's quite exciting as well, is they've announced that there's an additional SIBA loan of $20,000 interest-free again, half of which would be forgivable if repaid by the same December 31st, 2022 deadline. This additional $20,000 would be available to those that were eligible for the SIBA loan, the original SIBA loan, and who continue to be seriously impacted by the pandemic. This hasn't been defined what that means by continue to be seriously impacted. And an attestation of the impact, though, of COVID-19 on your business would be required to access this additional $20,000. So that's all we know about this additional $20,000. It hasn't been rolled out. Access is not yet available. No further details other than what I've presented here are available yet, but this is something to watch for. It should be coming out imminently in the next couple of weeks, hopefully. So again, for those that already applied for the 40, you may have access to an additional 20. And for those that haven't, keep in mind the deadline is not yet over. And for those operating through a non-business checking account, get a checking account, a business checking account before the end of the year, and you could possibly have access to this SIBA if you meet the other criteria. The next program I wanted to cover was the Business Credit Availability Program. You'll recall this was a program which allowed you to have access to EDC or BDC loans. These were accessed through your financial institution. Nothing has changed. These are still available. However, in the most recent speech from the throne, what I wanted to highlight was there was an announcement that the BCAP program will be increased. So I think more funding is coming, but we don't know anything more than the fact that they've announced their intention to increase this program. The next program I'd like to cover is the Canada Emergency Commercial Rent Assistance. You'll recall this was otherwise known as CECRA. You'll recall that CECRA was available through landlords, and it was originally rolled out for a period of 3 months, April, May, and June, then extended month by month to July, August, September. The program ended at the end of September, but the application deadline has not ended, and that's what I wanted to highlight here. Application deadline is October 30th, so coming up in 2 days. So there is still an opportunity to apply for this program if your landlord has not. Again, it has to be done through a landlord. And essentially, that's all I wanted to highlight here. What I wanted to spend a little more time on is the new rent subsidy program that is coming up. The old one, the CECRA, didn't have the uptake that the government was hoping for probably because it was there were limitations with respect to the revenue thresholds and the fact that it had to go through the property owners. The new program, the Canada Emergency Rent Subsidy, CERS, has been recently announced but not yet rolled out. What we know about it is that it would provide rent and mortgage support until June 2021 for qualifying organizations that are affected by COVID. This would be provided directly to tenants. So unlike the CECRA, this would be going directly to tenants, but also would have some support to property owners. This would be available to businesses, charities, and not-for-profits, similar to CECRA. There will be some kind of revenue drop threshold test, similar to CECRA, but they haven't defined what that will be. This program will subsidize a percentage of expenses on a sliding scale. up to a maximum of 65% of eligible expenses until December 19th of this year. The program will be retroactive for the period that began September 27th. And in addition to the 65%, there will be a top-up CERS of 25% for those organizations that have been temporarily shut down by a mandatory public health order that's been issued by a qualifying public health authority. So very similar to what we're going through in Ottawa right now, what restaurants and fitness and other institutions are going through with the mandatory 28-day health order. This would help those businesses. So overall, maximum CERS would be an 85% of eligible expenses. So very generous. Again, that's all we know about it. It's not accessible yet, but details are expected to come out in the upcoming weeks. That concludes what I wanted to talk about on the businesses, the programs available to businesses. I will now switch gears to those available to individuals. So you recall the major program was the Canada Emergency Response Benefit, otherwise known as CERB. All I wanted to highlight here is that the access to CERB hasn't ended. CERB has ended as of September 26th, but access to it has not. You can still apply up until December 2nd for retroactive payments. So keep that in mind. So with CERB ending on September 26th, 3 new programs began on September 27th, as well as an enhanced EI program. These 4 new changes will continue for 1 year. So life after CERB, what does it look like? If you were on CERB through Service Canada, then the goal is to get you on to EI if you qualify in a streamlined way as possible, which would mean that you would just continue completing your reports as you have been. There would be an automatic review of your file, and if it was determined through that review you qualify for EI, you would just have an automatic start to EI claims. So that hopefully takes care of the bulk of those that were accessing CERB through Service Canada. It should be noted if in that automatic review you didn't qualify, you would be notified, and then you may consider the new benefits whether you qualify for those. For those that are self-employed, also for those that may not otherwise meet the criteria of EI, particularly in insurable hours and other criteria, or for those that had gone through CERB, accessed CERB through the CRA portal, you will not have as an automated, as a streamlined process as those who had access through Service Canada. You yourself would have to determine if you are eligible for EI, and if you are, then apply for it. And if not, you would then likely want to determine whether you are eligible for the new Canada Recovery Benefits. For anyone that's a first-time applicant as well would go through this stream. Determine first whether you're eligible for EI. If not, determine whether you're eligible for the CRB, Canada Recovery Benefits. So in terms of EI, the Simplify and Enhance program, very briefly, this program sets the minimum unemployment rate of 13.1%. It can be higher depending on your region. The minimum insured hours have been reduced to 120. After credit, the provision of a one-time credit of 300 insured hours will be available to all for regular benefits and 480 for special benefits. The increase to the minimum benefit will be 500 per week before taxes and 300 for parental. And the increase to the minimum weeks of regular benefits is to 26 weeks. So very much aligned with the new CRB benefits, as you'll see shortly. So what are the new CRB benefits? So the main one is the Canada Recovery Benefit Program. So this program is primarily income support to employed and self-employed individuals who were affected directly by COVID and who aren't entitled to EI. So this is a 2-week period, $1,000 for every 2 weeks. Unlike CERB, there will be deductions at source of 10% taken, so the check you'd eventually see is a $900 check after tax. You can apply for a maximum of 13 periods, which is 26 weeks, and they don't necessarily have to be consecutive. The eligibility requirements: you must reside and be present in Canada, be 15 years old, and have a valid SIN. You have to not be working because of COVID or have a 15% reduction in your average weekly income from the previous year due to COVID. You are not eligible for EI, and that's why I said you've got to check your EI eligibility first before you go to the CRB in the decision tree. You have not quit your job or voluntarily reduced the hours unless it's reasonable to do so. You were seeking work and haven't turned down reasonable work. You had an income of at least $5,000 in 2019, 2020, or the 12 months immediately preceding this application. This rule is very similar to the old CERB rule. And you cannot have been receiving other benefits during the same period that you're applying for the CRB. You would have to reapply for the CRB every 2 weeks, unlike CERB, which was 4 weeks. This is a retroactive application, so you are reapplying after the week is over. The Monday after a particular week is over is when you can apply. And you have up until 60 days until after the period to apply. So it's a less generous timeline than the CERB, which still allows you to apply. As of today, you only have until 60 days after the end of the period. Can you earn income while receiving CRB? Yes, you can, but keep in mind that once your income level reaches $38,000 for the year, you will have to repay 50 cents of every CRB dollar. That is every dollar of income above $38,000, and this will be determined when you file your taxes. You will not need to obviously pay back anything more than what you would have received in the benefit. And like all of the programs that I've talked about and I will talk about, it is taxable. So that's the CRB, that's the main program. So what is the CRCB? That's the caregiving benefit. And this is income support to those that are caring for either a child under 12 or a family member who needs supervised care because of COVID. This is a 1 week increment, so $500 per 1 week period, $450 after tax, again, deductions source taken, unlike the CERB program. And you have up to 26 weeks to take as a maximum, not necessarily need to be taken consecutively. Eligibility, the first criteria, similar to the CRB. The second one, you have to be unable to work at least 50% of your scheduled work week because you're caring for a child under 12 or a family member that requires supervised care. The reason for care has to be that the school or the care facility closed or was unavailable due to COVID. Or you can, the person under care is either sick with or has symptoms of COVID, at risk of serious health complications if they get COVID, but only as advised by a medical practitioner. So you can't self-determine that. Or is self-isolating due to COVID. Again, only as advised. So you can't self-determine the self-isolation criteria. You cannot be receiving paid leave. You have the same 5,000 requirement as the CRB, and also cannot be receiving other benefits during the same period. You must reapply after every 1 week period. Once the period is over, it's a retroactive application, and again, up to 60 days. This CRCB benefit is limited to 1 individual per household. Doesn't matter how many people you have in your household that you're caring for. Only 1 individual per household per claim can apply for this. The last benefit I wanted to cover was the Canada Recovery Sickness Benefit, and this benefit is available for those that themselves are sick or have an underlying health condition related to COVID. This is a 1 week period, $500 per 1 week, and the maximum is only 2 weeks for the entire duration of the program. So the 2 weeks don't have to be consecutive, but you only have a maximum of 2 weeks. Eligibility, other criteria, the reside criteria is the same as the others. The main criteria here is you're unable to work at least 50% of your scheduled work week because you're self-isolating for one of these reasons. Either you're sick with COVID or may have COVID, either you're advised to self-isolate, again, due to COVID under advisement of a recognized authority, or you have an underlying health condition that puts you at greater risk, again, under advisement. And the other criteria are similar to the criteria for the other benefits I just covered. Reapply every 1 week and taxable. And that covers the individual benefits. I'm a little short on time, so I'm going to race through some of the other things I wanted to talk about so we can allow a few minutes for questions. Just keep in mind that all of these programs are taxable for your business and for individuals. So when you're doing your tax filings, keep this in mind. There are new T4 reporting obligations for employers. There are new, there are ROE obligations that are impacted in relation to COVID. There are some employment expense items that I want to cover. Keep all of your records. CRA is going through a robust audit process right now. It's begun. If you're contacted, it's really a good idea to make sure you're prepared. You've got your records, you've got your elections filed, and you're ready for any audit. If your business has any type of assurance engagement, like a review or audit, keep in mind your record keeping has to be in place as well for COVID-related items. There will be additional work required. In terms of tax and filing payment deadlines, all I want to say is most of the extensions have come and gone. There are some that are still in effect, particularly the scientific research deadline, the charity return deadline. All of these are listed here, and you can access them if they apply to you. Additional considerations for T4 reporting obligations. Again, there are T4 reporting obligations for all employers. So this is not something just if SUS had affected you. You will be required to report employment income in box 14 with a bunch of new codes. Essentially, CRA is trying to validate all the payments they've been making. You can see the codes here for employment income during these COVID periods. You will have to specifically report those. So this is a change for pretty much everyone, for pretty much all employers. ROE obligations, just a general rule of thumb, none of your obligations have gone away. You are required to issue ROEs when employees stop working. Same thing applies, stop working because of COVID. EI requires EI applications require the ROE. The CERB and CRB do not require an individual to have an ROE, but again, that doesn't negate the employer's obligations to issue ROEs. The last thing here, employment expenses. Keep in mind that there is a $500 reimbursement for personal use computer or home office equipment due to COVID. CRA said this will not be considered a taxable benefit if this is provided to you. Workspace in home, still a lot of this is up in the air, hoping to get some definitive guidance from CRA on addressing the workspace in home deduction for employees that have been required to work at home. There will be more coming on this, and right now CRA's got a short form that it's circulated, but again, it's only in draft, so really just keep your eyes open for this. There will be some concessions and allowances here, just don't know what they're going to look like yet. And with respect to parking, employer provided parking spot at a place of employment where that place of employment is closed due to COVID would not be a taxable benefit. So that's all I wanted to cover here in terms of additional resources. We've got not a lot of time. We've got about 6 minutes here for any possible questions. You can use the Q&A chat feature to ask your questions. I wanted to point out while we're waiting for that, just that you have some great resources in the Government Canada website, as well as our Logan Katz Information Hub and our support report. If you want regular updates on COVID-19 support programs and those updates continue to come in, just subscribe to our mailing list and we'll make sure that you're kept up to date. You can always reach out to us and myself, Angelique Delaurie, should you have any questions. And having said that, I'll just open up the floor to any questions. So I have a question here. Where can we apply for the new SEBA 20,000? So the application is not yet open. This has just been an announcement. At this point, presumably the application will go through the same way that the original SEBA went through, which is through your financial institution. But again, it is not yet available, so save yourself a call right now. Your financial institution would be the best way to access this, but again, it's not yet available. The next question is, where can we apply for the new CERS? And again, that program as well is not yet available. And so we don't have any details on that. But as soon as it comes out, we will make sure we share that. Any other questions before we wrap up?
Hi, Angela, can you hear me here?
I can.
Okay, perfect. So there's just a couple more questions that I'll read out. So the first one is, we got IRAP support in the summer. One condition was to not qualify for SUS. So can we still apply for SUS in other periods now?
That's a good question, and I would need to know more details about your situation. So I encourage you to reach out to me. You've got my email. I encourage you to reach out to me and we can discuss. Typically, and this is more of a general comment, the assistance pertains to a particular period. So typically, if you were applying for a particular period and you did not have, for example, SUS assistance during that period, it should not impact it. But having said that, again, I need to understand the particulars of your case, and then we can definitely provide you with some guidance.
Okay, and the next question is in reference to slide 12. It says, are bonuses for employees included?
In reference to slide 12, which is eligible remuneration. So bonuses to employees could be included, but again, you've got to look at the period that the bonus pertains to. If it's a bonus for a period pre-COVID, then I would say no. But if it's remuneration or bonus for the COVID claim period, then I would think that it would be qualifying when you follow the general guidance of an amount paid as remuneration that would otherwise be subject to payroll deductions. And
okay.
Any other questions? We've got about 1 minute left.
Okay, so the next one is, if our company qualifies to receive the SUS subsidy, can employees still apply for CRB if their salary has been reduced by the 15%?
So this interaction between SUS and CRB is more distinct than the old interaction between SUS and CERB. I'm not sure where the 15% is coming from this question. So perhaps we can, if you can reach out to me via email and we can talk about this a little bit more. Because I don't want to, I'm not sure if I have all the facts when you're referring to 15%. I'd be happy to take a look at your question after the session's over. Unfortunately, I apologize because it is 11 and it marks the end of our update. Thank you all for attending, and I hope this was useful. I hope it gave you a few things to think about, a few things to maybe look into. I hope it helps you most importantly in getting some more support for yourselves during this time. And I'd like to again thank you all for attending, and have a great rest of your day.